if to compensate that, we may need to keep the currency undervalued in the next decade so that the consumption to curtail and investment to goes up by saving more. We don't need to subsidize the energy. So you see, the country is going through a very peculiar balance of payment crisis. So the worst is behind us. So if we keep the interest rate up to 18% based on the current forecast, the interest rate would be positive. However, if we do aggressive cutting and bring it down further down, then there is a risk of demand to research, which can create a balance of payment crisis, and that could put a pressure on imports and on currency. And if the currency depreciate, the inflation would come back. And to counter that inflation, the rates have to increase again. You have to see the things in perspective. I mean, whenever we talk about the currency, we need to see how the currency is moving in the past some time. With realization of that perspective, if you depreciate a currency in the short run, it would have an impact on a bit of boost on exports, but not much. And it would result in the curtailment of import because of the demand go down. But in the long run, keeping the currency close to its real value, or rather keeping it little bit undervalued, is better for a country like Pakistan, where we need to generate exports and curtail imports to have a current account balance in favor to lower the balance of payment crisis, which perpetually the country is in. So, if you consider back in days like in 2016 and 13 to 16 to 17, when the PKR was kept artificially overvalued, and the imports were growing and the GDP was growing based on those imports, while the exports were falling down in real terms and stagnated in absolute terms. So at that time, the damage was done, and if we see it today, the currency has been depreciated significantly in the past 2 years, and the currency is kind of fairly valued in this time. And any depreciation in currency would not have a bigger impact on exports and reduction in imports as had the case in 2013-16. But in any case, for a country like Pakistan, it's better to have undervalued currency. So maybe a little bit of depreciation of currency is good, and keep it little undervalued for the few years is good to compensate for the overvaluation in the past. Perspective, because you're right that the currency has devalued significantly in the past 1.5 years, especially in 2022 and half of the 23. Like it moved from 170 in April, in March 2022 to about 300 in the mid of 2023, and currently we are hovering around at 280. So there's a significant devaluation in the past 1.5-2 years, and that is perhaps enough to bring our exports up and curtail the imports. And the data is showing somehow that way. Like your imports are significantly down, the domestic demand has dented, and in this year, 8 months, the imports are even lower than the restricted imports last year when there was imposition of artificial restriction, and there were restrictions on LC openings. And today, without any meaningful restriction on LC openings, the LC volumes are down. So the imports are down significantly, and as a consequence, the GDP growth is low. In the first quarter, the GDP was going around 2%, with the agriculture growth of 5% implies that other areas are negative. So we need to consider the employment generation and GDP growth, so any further devaluation could hamper that. On the export side, we have a very interesting trend. If we see the exports, the non-manufacturing exports have grown up significantly in the first 8 months of this year, especially the agriculture. One of the reason is the higher rice exports, which is due to the ban of rice export from India, and that gives an opportunity for Pakistan to export more, and overall the production was better as well. But if you take this rice out of the equation, the other agriculture and exports which are not manufacturing, the services and other exports where the manufacturing portion is less are growing as well. So this means the devaluation of the currency in the past 2 years is giving dividend in the form of higher exports. But your manufacturing exports, including the textile, which is about 60% of your total exports, are falling. And one of the reasons for that is the growing energy cost. So you see, the energy prices have moved up significantly in the past 2 years for a couple of reasons. One, the electricity prices are connected to the uh, depreciation of PKR. So the many new capacities have added in the power sector, and all the capacity payments are linked to USD and interest rate. Since the global interest rates are high and you have high depreciation, the capacity payments have ballooned. And with lower growth, the capacity payment per unit is growing. So we need to revisit that. Then the circulated was growing both in the gas and electricity prices, and that has resulted in an increase in prices to curtail that circulated. And the circulated growth is partially attributed to the currency depreciation and growing capacity payment. The other part is due to the inefficiencies in the distribution and the transmission sector, and the continued inefficiencies are resulting in increasing prices. So, if we could depreciate the currency more, it would support the export in the short term, but eventually the energy prices would catch up, and that would reduce the competitiveness of the exports. So, we cannot see this currency in isolation. We have to solve the puzzle of the energy prices, which how to come down to make industry more competitive and take the advantage of the currency depreciation what we had in the 2 years. No, that's not the point. We don't need to subsidize the energy. Now, gone are the days when the energy was subsidized for textile and other sectors. Now, there is no subsidy at all. Plus, the industrial sector is cross subsidizing the domestic sector. In domestic sector, there are certain segments which are protected, and where you're not fully recovering the cost, and that cost has been passed on to the commercial high net worth individuals and the industrial sector. Then the inefficiencies in the discourse are being passed on, and the recoveries of the discourse are being passed on to good paying customers, including the industrial customers. So the industrial customer cannot take anymore the gross subsidy and cannot take the inefficiencies of the discourse and in transmission and distribution. So we are not talking about subsidizing the textile or any other sector. We are talking about keeping the energy price based on the cost. So whatever the cost of the energy production, including the capacity and the fuel charges, and charge a reasonable transmission and distribution on it, and you're good to go. But we cannot live with this cross subsidy and inefficiency being passed on to the productive sector. So you see, the country is going through a very peculiar balance of payment crisis. Though the worst is behind us, the fear of the default is not anymore in the immediate term, but in the medium term, that the default fear and the repayments burden are high. So we need to keep a real interest rate on in positive territory going forward to make sure that to curb the imported demand. That's one thing we need to keep rates high. Having said that, the inflation is expected to come down. And once the inflation is down below 20%, I don't see any issue in declining the interest rate slightly. But from maybe from 22%, we may go up to 18% by December. But any further decline or lowering the interest rate aggressively can trigger demand and create a balance of payment problem again, which can lead to currency depreciation and which to bring inflation, and eventually the interest rate have to increase again. So we need to see this the whole equation. As long as interest rate cut down is less and we keep the real rate positive, so it's good for the stabilization to attain the permanency. So if we keep the interest rate up to 18% based on the current forecast, the interest rate would be positive. If we cut it by December to 18%. However, if we do aggressive cutting and bring it down further down, then there is a risk of demand to research, which can create a balance of payment crisis, and that could put a pressure on imports and on currency. And if the currency depreciate, the inflation would come back, and to counter that inflation, the rates have to increase again. So instead of declining too much and increasing later, it's better to decline at a slower pace. You see, the devaluation, it's for a developing economy. Keeping currency a bit undervalued in the long run is better. We have seen the China, Vietnam, and other countries spur into the growth momentum by keeping currencies undervalued.
It was one of the
Pakistan
main
historically
things.
has kept Pakistan has historically kept interest the currency overvalued, and that's how the demand structure is lopsided, and our GDP is largely constituted of consumption, and investment is very low. So if to compensate that, we may need to keep the currency undervalued in the next decade, so that the consumption to curtail and investment to goes up by saving more.